Kelly, how are you?
Good. How are you?
Good, good. Thank you so much for coming in.
Thanks for having me.
Yeah, so this is our fourth podcast episode.
That's exciting.
Yeah, super exciting. And it's the podcast is actually geared mostly for first-time home buyers.
I love it.
Yeah.
I love the education.
Yeah, definitely. And that's our goal, is to educate and really make it very simple to understand. And for someone that's going through the process, there's so much to learn, so much to know. And it's not like they have to know everything, because we're there to help them,
Right.
you know. And so we have Kelly here. She is a title officer. Is that what?
Escrow officer.
Escrow officer. Okay. So you are an escrow officer and you work for Fidelity?
Yes, Fidelity.
Fidelity National Title. So we have multiple title companies here that in Reading, and so Fidelity and Fidelity is also owned by or Fidelity owns Chicago
Yeah,
Fidelity.
Fidelity Financial is an umbrella of title insurers, but we also have sister companies like Chicago Title, Ticor Title, Lawyers Title.
Okay.
Yeah,
Okay.
so there's different brands within the umbrella of Fidelity, and then there's
Yeah.
Fidelity Title in and of itself.
Okay. So it actually took me a long time when I got in the business to understand title insurance and what it was there. Really?
Yes. Yeah. It took me some time, even when I first started as an escrow assistant. I mean, it's definitely it's so vast of the information, and every file is going to be different. So it takes a very long time.
Yeah, and I remember when I first got into the mortgage business, the manager I was working for, he took me in the back and said, "Okay, the first thing you need to know about the mortgage process is title." And he put up a whiteboard and he started writing down, and he said, first, second, third, and he said mortgage, second mortgage, third mortgage, and he explained what this all meant. And so I was still confused a little bit after that, but it took me a while to understand it. So in your own words, and we can talk about this, but what exactly does the title company do for a first-time home buyer?
So we issue title. We do a lot. We not only hold just the title, but we also do the escrow, which we can definitely go into.
Yeah.
But for title specifically, we are looking through the public records and looking at the previous ownerships, looking through all the different channels to see what is currently against the property as far as encumbrances or restrictions, easements. There's so much that goes into it to see what's against that property specifically, and then we find out, and then we start to actually clear certain items. So, like you were saying, a first, a second, and a third mortgage, we would work on getting what was required to have those released off of the property, so the buyer had clear title going into ownership.
So clear title. I like to think of it as, let's say, a car loan, and it works similar, right? Or no?
No,
It's
no.
not the
I
same?
like to think of a title report as something similar to like a home inspection, where you're getting an inspection of the title of your property.
Got it.
And then you're kind of looking at things that are on it to see if that's going to match the kind of property you want. You know, if you're going to get chickens, you want to ensure that the title is going to allow for it through the CC&Rs, the covenants, restrictions, that sort of thing, because that's going to be a big game changer on if you want that property. So I like to say the title report itself is like a home inspection. But
You're inspecting, so sorry to cut you off. So you're actually inspecting any liens or any other, you called them encumbrances, that would be attached to this property.
Yep, liens, mortgages, anything that somebody has any kind of interest into the property, we're inspecting all of that, and then along the process of the transaction, along with anything an agent and a lender's doing, we're sitting behind the scenes and clearing all of those items as well.
Yeah, so think of a property where anything that you lent, that someone, so let's say I'm a borrower, or let's say I own a house, right? And let's say that house that I own, it doesn't have any loans on it, meaning I've not gotten any loans. I paid cash for the house, right? So this property, in theory, it could have other liens, other encumbrances, or other things that are attached that I might not know about.
Correct.
And let's say I went to my neighbor. I'm like, hey, I want to buy your house. And he's like, great, and I want to sell it to you for, let's say, $400,000. I say, okay, great. I got $400,000, or maybe I get a loan, maybe I don't, but I just give him $400,000, and he then transfers that ownership of the home to me. What's wrong with that picture?
Unfortunately, people do it all the time, but you are essentially buying a piece of property that has somebody else's financial restrictions, I guess is a good word to say it,
Yeah,
because they might be owed to money. They might be owing somebody money, and that person has put a lien against the property, and now you have taken on a piece of property with a lien where you're going to pick up that financial
gotcha.
interest. So it's very tricky to not do something. You also have to think about the fact that you want to look at easements too. We've run into this actually quite a bit, where people are just, here's my $400,000, thank you for the deed, and they go and record it. You don't know also if they are perpetrating themselves as somebody that is a homeowner when they're not a homeowner. You don't know if
Mm.
maybe there's a family situation where somebody had it in a trust and another beneficiary has rights
Hmm.
to that property, and you just handed over money. And then this other person could say, well, I'm entitled to money, give me my money. You could also have a lot of
Yeah.
issues with easements. Are you sure you have the access to that property? That
So
sort of thing.
yeah, so this is why title is so important.
It is, because it's much more vast than people realize.
Yeah. It's not
It's
just
not just mortgages.
how much do they owe on this
Exactly.
property. It has to do, because what is an easement
An
exactly?
easement is the access to your property or on your property. So I can have an easement to my property. So say there's a vacant lot in front of my
Hmm.
property, and
That someone else owns.
I have to go down a driveway to get to my property in the
Hmm.
back. You have to have an easement to cross
To
that
access.
person's, yep, because you're on somebody else's land. So that first lot would actually have to provide an easement to allow me to get to my property.
So what you're saying is, let's say I owned a house, and there was a house in front of mine,
Mhm.
that there was a road, then I needed to get to my house. I had to go through this other person's property.
Yep, they would have to provide
They
an
they give me
easement.
an easement, and that easement basically gets recorded, is
Yes,
what you're saying, and
it
you guys
needs to be
manage that.
recorded. Yeah, it needs to be recorded to show the true right to
The
cross
ownership,
their
yeah, to
property.
be able to move, and that stays with the property.
Yes.
It doesn't go with the actual person. It stays for that specific property.
There are easements that can be voided based off of ownership changes, but typically
Got it.
it doesn't. It stays with the property because it's a recorded item for both of those properties. Same thing if you have a telephone pole and it's a PG&E telephone pole. You're going to have an easement where
I was gonna
PG&E
say,
can
yeah,
access your property to get to their telephone pole to
yeah.
deal with anything that might need to be done for that
So
pole.
this, I just had a borrower, it's a first time home buyer, and they were buying this home. And the title, when we got the title report, it actually showed the easements, like what you're
Right.
talking about,
Yep.
on the actual report. And the report actually showed that they weren't able to locate where these easements were.
Mhm.
And so the concern on the lender standpoint is, hey, these utilities could be underneath the house, and what happens then? Like, and we didn't know, so I had to go down to the city and say, hey, can you locate where these easements were? Well, what
Right.
happened was these easements were recorded back before the house was actually built, and so the easement was way away from the house, and it just didn't show where the location of these easements were.
And you have to think about why that's so important to have title insurance, because the ownership is going back years and
Years,
years and
yeah.
hundreds of years to the times where they actually created lots that you
Of
could
deeds
then,
and yeah.
hand over, whatever item you needed to say this is your
Wow.
property and whatnot. So you're looking at generations of family members and
Ownership.
non-family members and ownership,
Yeah.
and so you really have to think about how that all affects you and
Yeah.
your lot, because at some point somebody could have moved the boundary lines. You can actually do
Yeah.
what you call a property line adjustment, and you can change your boundary lines and share or give or
Get more.
receive.
Yeah. Yeah. Yeah.
So there's a lot that goes into it, and you want to protect yourself to understand what your property looks like. Why is somebody on my property? Why are they driving on my property? There's so much to think about. Same thing like with the chickens. There's a lot of people who
Hmm.
really want to have chickens nowadays,
Yeah.
and
Can you
if
have chickens in the city limits?
I believe you
I think.
can,
Yeah.
but you would need to make sure that there's no CC&Rs, which are
Gotcha.
conditions, covenants, and restrictions that are recorded against a piece of property that would not allow for that.
So CC&R. Let's talk about that real quick because that's part of
Yeah.
title. So what'd you say?
A CC&R stands for conditions, covenants, and restrictions. And
Conditions,
so,
covenants, and restrictions.
yep, so it's going to give what you can and can't do on a piece of property.
Got it.
So,
And it could be like a neighborhood.
it could be a neighborhood, and the misconception is that it's only in an HOA, a homeowners association, but that's a total myth.
Completely
You can
different
have a
things.
CC&R without being in an HOA.
HOA.
Yep.
Oh, interesting. I didn't know that.
Yeah.
Yeah, so you can have CC&Rs that are not a part of an HOA.
Right.
Yeah, and what is an HOA?
An HOA is a homeowners association. So it's a community per se. Now it could be big or it could be small,
Yeah.
where you're paying dues into something and then you're getting certain perks out of it.
Oh, I
And
see. So like I had I had an HOA where I paid like $45 a month, and they managed and took care of the landscape on the driveway on the road inside my neighborhood.
right. Yep. So that could be an HOA, or maybe you have like a shared pool with your community and you pay
Yep.
dues for them to upkeep
Or that
that.
maybe it's gated community
Right.
and
So you have a
you
guard
pay
shack
and
and
you
all
need
the
someone
money
to
that you're
manage
paying
that,
for.
and so that's an HOA cost or
Right.
fee.
Right.
HOAs are also are very common with condos
Yep.
for HOA.
Yep.
Okay.
But you can have a HOA without a condo too. We have plenty of those here
Correct.
in the Reading
Yeah.
area.
Yeah, which was my house wasn't a condo, but I still had an HOA.
Right, exactly. Yeah, and I
Yeah.
live in a homeowners association, so I did my due diligence of understanding not just what my property looked like, but what I was getting into of the ownership within that, because
Got it.
sometimes there are guidelines as far as what your landscaping can be or what
Yeah.
your paint color can be. So it's just, and again, that's going to be disclosed on a title report that you're in an HOA so that you can do your extra due diligence. And then
Wow.
we are still helping to get you that documentation to really review it.
Yeah, that's important because whoever's buying this property, they need to know, okay, how much is the HOA,
Right.
and what are the requirements? Like at the HOA that I had to make sure I couldn't park my boat in my driveway.
Right. Yep.
And I got frustrated because they send me letters. They put letters on my door. Now, do you know what happens if I don't comply with the HOA?
They're going to fine you.
A fine. Okay.
And depending on what they've set up as the association, which you're agreeing to by becoming a homeowner.
And you sign these documents at close.
You do.
Yeah.
Yeah. So everyone's going to be different, but they're going to start with the warnings and then the fines, and then they're going to start levying it against your title. They're actually going to go file something against the public record that says this amount of money is owed to me. And then it kind of goes from there, where an HOA can actually
Eventually take your property.
They can
Really?
foreclose on it because you're owing them money that you never
Yeah.
paid for, and
Yeah.
you're obligated to pay them so
Yeah.
that they can make sure everything's maintained properly.
Gotcha. Wow, so interesting.
Yeah.
Okay.
It's fast. I mean, that's
Yeah.
the crazy thing about title insurance and why it's so important is because there's so many different elements. It's not just one specific thing. And
Yeah.
title insurance is very different than homeowners insurance, medical insurance, anything of that nature, because what you're doing is you're only paying a one-time fee, and it is actually covering the past for
Mm,
future ownership. So
I
if
see.
that makes sense. So
Yeah.
pretty much anything that anybody has a legitimate or a false claim to your property from something that's in the past, but you're now the
Yep.
owner, you can then file a claim for something
Yeah.
that's happened in the past. And that is a one-time fee that follows you through the life of ownership, whether you own it for 5 years, 20 years, 30 years, 50 years.
Wow. Okay. So title insurance. So the insurance part of it is basically ensures that if I am a first time home buyer and I go and buy said property, let's say its property is $300,000 and I get a loan for $300,000, you're ensuring that that loan is the only loan on the property.
Right.
So if I go 10 years down the road and all of a sudden someone knocks on my door and says, "Hey, I have this lien
Yep.
that I put on the property from the previous owner, and this lien was for $10,000 because I did their roof and they never paid me."
Right.
Then maybe he put a lien on there on the property, but I got insurance, and so that insurance would essentially cover that $10,000 that the
Correct. Yep. So title insurance is really a good financial move to get, because we're going to not only, it's an and or situation. We're going to help with the legal obligations of making
yeah.
sure that gets cleared up, and also the financial obligations.
Yeah, and that brings me to another point is there's two insurances that we're talking about, because you're also insuring the lender.
Lender. Yep.
Because if I'm giving the loan, the lender is they're very interested in making sure they protect that lien.
Right.
So they want to be in first position.
Right.
So
It's called the golden rule in
okay,
in title and
yeah,
escrow. We call it the golden rule because it's first in, first out. So if you have a first and a second, and you pay off your first,
yep.
that second then moves in, and then it that would then come off. So you have a first in, first out is what we call
And
it.
why is that important? Why is it important to be first position instead of second position?
Because if somebody defaults on their loan, and say you have a mortgage against your property and a HELOC, and you can't pay your mortgage and you're still paying your HELOC, well, the moment that your mortgage forecloses on you, it wipes out all of the other debts. So that lender, on that's the second, the HELOC lender, they most likely aren't going to get the money that is going to be made when
They're
the
gonna get
foreclosure goes
they're
through.
gonna get the leftovers.
Yeah, exactly.
So let's say there's a first mortgage for $200,000, and then there's a second mortgage for $50,000. Then let's say there's a third mortgage for 20,000. That's what, 270,000 total,
Yeah.
250 and 20. So let's say they sell the home. Let's say the first forecloses because they're not making the first or paying the second and third. The first forecloses, and then they end up getting their money, their 200,000. But when they go to sell it, they sell it for 220. Well, then the second mortgage would get 20,000, and the
They
third wouldn't
yeah,
get
they
any.
could get the pennies that are left over,
Yeah,
essentially.
whatever.
So
Yeah, so each person has to be made whole before the next person in line gets any
exactly.
money. Wow.
Exactly. Yeah.
Yeah.
So it's really important for a lender to know that, but they also want to know the other things, like who else has the ability to come in and foreclose. Your
Yeah.
tax collector can do that if
Yeah.
you're not paying your taxes.
The tax
The
collector actually
HOA.
is in first position. That's the real
Yes,
first.
yep,
Yeah.
yep. But the HOA, same thing if you're not paying your
Yeah.
HOA due. So the lender wants to know all of what's going on, not
Yeah.
just their first lien position, but all, which is why they get a full title insurance policy, just like an
Yeah.
owner gets a full title insurance
Yeah.
policy to all those vast things that are happening
Makes
with
total
title.
sense. Yeah. So the process of that, for a first time home buyer, they don't necessarily have to, go and get this. This is going to be done. The lender helps out with this.
Right.
Yeah. Yeah. We'll help out the buyer and we'll facilitate and work with the title company for the buyers to make sure, and we actually review the title, we call it a prelim, or the actual title report.
So do you know why they call it a prelim?
No, I do not.
So it's a preliminary report to your final policy. And
Oh,
so
wow.
you're seeing what's needed to either clean up or accept before you get your policy after we close the escrow.
Clean up or
So
accept.
you get your
Okay.
policy goes into effect after we've closed the escrow for your ownership. And
Got it.
so it's preliminary to that, which is kind of cool,
Yeah,
if you think
it makes
about it.
sense.
So that's
I
what
didn't
the
know that either.
it's funny because people don't realize that like we're behind the scenes doing so much
Yeah.
with lenders and agents and sellers and buyers to ensure that at the end of the day, everybody's cleaned up with their title. That the seller did everything that they needed to make sure those obligations were completed, and then that we are cleaning up the title for the buyer, making sure that all
Gotcha.
the things for the buyer are taken care of, making sure all the things for the lender are taken care of.
Here's a question. So what about IRS liens? Are those, do those go in position like first, second? Can they just go in and beat the first? Let's say I have
First
back
in,
taxes.
first out.
It's still first in, first out. Okay, so the IRS, let's say I'm self-employed and I haven't paid my taxes. They can put a lien on the property.
Totally.
Yeah.
But if you're self-employed and you put a lien on your property and then you go to sell your property, we have to make sure that IRS gets paid before you get your proceeds from your sale.
Got it. Yeah. So, which is your job is providing title insurance, because otherwise, if you didn't, the next person would have basically be on the hook for that
Right. And
that buys the home.
say that was missed for whatever reason. There's a vast majority, there's such a vastness of why it could be missed, but
Yeah.
say it's missed. That's where title insurance comes in, and we're
yeah.
going to and or help with the legal obligations of these claims and the financial
Got it.
obligations of
I
these
see.
claims.
Wow.
Yeah.
So, can you give us an example of where this came into place, where you had to step in and protect a buyer that got insurance?
Yeah, we've had a couple situations. I think for me, the one that sticks out the most is I had a transaction that we closed escrow, and after the buyers closed the escrow, they had somebody on their property, and they were like, "Why are you on my property? Get off my
Oh,
property!"
wow. So
And
they moved in, and
in.
someone's like comes on their property, just
Yep, yep.
yeah,
And they were at the back of the property or somewhere where
working, doing
they
something.
were doing something. I think they were pulling in their boat to the side of their.
Oh,
I'm not exactly 100%,
yeah.
but pretty much they were like, "Why are you on my property?" And they were like, "Because I have the right to. Here's my easement." And
Oh
the
my.
easement was missed through the transaction.
Oh wow.
And so we made it whole for them by making sure that claim got taken care of, because it wasn't something that was disclosed. And of course, somebody has access to your property that you did not agree to.
Wow. So how do you make something like that whole?
I'm not exactly sure
What the outcome?
how
Yeah.
that all played out, because
Yeah.
it's a lot
I guess
of
there's multiple ways you could figure it out.
Yeah,
You
yeah.
could compensate the easement holder. You could compensate the new buyer. Maybe a combination of both. But you're
Yeah, and
trying to
there's going
figure
to
it
be
out.
some kind of maybe legal
Back and forth,
ramifications
yeah.
that could be done. So we're going to help with all of that to make sure that it's all taken care of appropriately.
Okay.
But it's important, to understand that we are covering you for those types of things.
Yeah.
That's, to me, the one that sticks out the most is
Okay.
that, an easement was provided and not disclosed,
Yeah.
and somebody had access to their property that they were not aware of at time of ownership.
Wow.
Yeah.
So the other side of what you guys actually, that was a lot, by the way. Thank you for
Yeah.
covering all that.
It is a lot.
That's a lot of information. So I know that you guys also do what's called escrow.
Yep.
And this escrow is completely different than actually providing the insurance
Right.
for the property. And so the amount of knowledge that you guys have for first-time home buyers, like I would recommend, if you're buying your first home, definitely utilize and talk to whoever the escrow agent is and
1,000%.
pick their brain.
Yes,
Do you-
1,000%.
Do you get people to call you?
Yes. No
Yeah.
question is, I always crack up because people say like, "Oh my God, this might be a stupid question."
Yeah.
There is no stupid question when it
Yeah.
comes to real estate, because every transaction is so different.
Yeah.
And everything is going to be, cater to what's going to be right for you, because
Yeah.
at the end of the day, this is the biggest investment you're going to
Yeah.
make. As a first time home buyer, this is your biggest transaction, the most
Yeah.
amount of money you're ever going to spend. Do not
Yeah.
hesitate to hold, to ask the questions. You don't feel like you can't ask those
Totally.
questions,
I say the same.
because
Yeah.
it's important for you to know prior to what you're getting into, so that
Mhm.
we can assist you to make the best decision you can.
Yeah.
So we're
That's
100%
awesome.
there. I love those questions.
That's
I'm like
awesome.
a total escrow nerd. So for
Yeah.
me, I love those questions. I love when people are taking the time to really understand it, because
Yeah.
it's such a big, big thing. I love being a part of people's transactions.
That's
I
awesome.
love being able to be a part of that. I'm not sitting there with the keys,
Yeah.
but I get to be a part of their transaction and making sure that they are loving what they're getting into.
Yeah. I love that.
Yeah.
I love that. Yeah, I always say that a no question is a dumb question.
Nope.
If they don't ask anything and they just assume, then that would be not smart.
Yeah.
But definitely ask the question, and we will definitely help them. My Siri is going off for some reason. Anyway, so on the topic of escrow, so what exactly is escrow mean for a buyer?
So it's actually going to be more than a buyer. It's going to be for the whole transaction. So escrow is considered a neutral or disinterested third party. So it's going to be somebody who's going to hold the funds for the buyer to make sure those funds are coming into escrow. We're collecting everything that's needed to clean up their title, documentation that all the different parties need, disclosures, anything the lender needs. And then we're going to be the ones who go and record that based off of your cleaned title to
Yeah.
then disperse to your seller, so that you're not having to do all of that.
Yeah.
You don't want to hand the seller a check and expect that that check is
Yeah.
going to give you the property.
Correct.
You want to make
Yeah.
sure that I'm taking care of it, because I'm not interested in either party. I'm not taking sides or anything like that.
Yeah.
I'm there just to hold your money, make sure everybody's taken care
Yeah.
of.
Yeah, so I always tell buyers, anyone that's buying a piece of property, you never want to just give the money directly to the seller,
No,
right?
I would not
even
recommend
if
that.
there's a deposit or anything, even if you're buying from a friend, family member, you want to give it to a third. The reason for the third party is it's a neutral it's a neutral
It's a neutral
party. It's a
person.
neutral party to the two buyer and seller, and
It's a holding account as well.
yeah, and they're going to go off of what's legally written on the contract.
Right.
And so this way you don't get into any arguments with the buyer or the seller of whose money it is and give me my money back. I
Yep.
want a refund.
Yep.
Yeah.
Yep. Even if it's family, we know that they might be your best friend, but at the end of the day, if your money is most important,
Yeah.
you want to make sure that you're protected to the best of your abilities. And the seller would want, if they truly do care, they're going to want you to make sure that you're taking care of yourself.
Yeah.
Because I'm also going to be giving them the money in the right way that they're supposed to get it as well.
So the first step of the escrow process, from what I understand, is where the buyer will actually give a deposit.
Mm-hmm.
So they write the offer for the house, and let's say they get an accepted offer.
Right.
And in the contract, the realtor will put a specific dollar amount for what's called a deposit. Can you explain what a deposit is? What earnest money deposit is?
It's got different terminologies. So earnest money can also be considered like a good faith deposit, and it's a good faith that you are really intending on buying the piece of property. You're showing some financial interest by saying, "Look, seller, I'm not yanking your chain.
Yeah.
I really want this piece of property.
Yeah.
So here's my, say, $500. Everybody said it's different amounts.
Each one is
But
different. It's
let's
what's
just say-
agreed with the seller and the buyer.
Exactly.
Yeah.
But let's just say it's 500. Here's $500 to show you that I have the financial interest to buy your piece of property. I am not wasting your time. I am here to really be present in buying your property, especially because you could have 10 offers.
Yeah.
You're showing I really want this, and here's
Yeah.
my good faith for that.
Yep.
And so that's the best way to
Okay,
describe an
cool.
earnest
That
money.
that makes sense. So with the earnest money, I'm going to share my best practice with earnest money because I get work with a lot of first time homebuyers, and they just have never gone through the process. So when it comes to the earnest money deposit, I always say, hey, make sure you don't borrow the money from someone. Make sure it's not cash that you just deposited, that was maybe in a safe or under the mattress, money that you kept at home. And they can't just bring you the cash.
Right.
They-
I don't have a cash register. There's no way I can take cash.
yeah, it's not like
I'm
you
going
guys
to
don't
say,
have it.
okay,
You
I'm
guys,
sorry. I'm going to
yeah.
have to take a check.
Yeah. So, and if you take a check, then you have to hold it for like 15 days or something.
Yep.
Yeah.
It's about 7 to 10 business days for a
Yeah.
personal check to clear.
Yeah, which could hold up the escrow process, could hold up them closing on time with also.
So we
go ahead.
can only do a cashier's check or a wire for
Yeah.
closing funds, and that's an actual good funds law
Oh,
where
I
it
see.
requires.
I didn't know that.
Yeah.
So they can't actually write a check for the actual closing part,
No, because if that check bounces and I've dispersed to the seller, then
even if you waited.
exactly. Yeah,
Yeah.
because there's every banking system's
There's
different
there's
on
ways
ways
to
they can pull
fraud.
those funds
There's ways for
and
fraud.
defraud.
Yeah.
Yeah. So cashier's check or wire are the only way I could take closing funds.
Yeah.
But as far as an earnest money, because you're usually doing like a 30 to a 45-day
Yeah.
escrow, we can take a personal
Yeah.
check up front. We just can't take the cash. We don't have that kind of ability.
So I always say, talk with your lender. Talk with the lender that you're working with when it comes to the deposit. A lot of first-time home buyers, they may or may not have the money readily available. They love the property, they're excited, and now they have to come up with $500, $1,000, and they may not have that. So then, I always say, just it's okay. We can figure this out. Talk with your lender and work it out with them before you go and borrow money, take cash. The lender's going to help, and I've helped many, many buyers in this situation figure out how to get that money to title.
I always tell people, check with your lender before you come to me to ensure that you've disclosed the proper accounts, and check with your agent as well to make sure that there's nothing contractually that would make a pause for anybody, because we want to go 50 miles per hour to get this transaction done. So always think about all the parties that are involved and what that money is going to entail for each of these parties. So credit card's not going to work. Be careful about money orders. We can't take the cash. You don't want grandma writing you a check. You really want to be cognizant of all of the parties involved, because again, it's a good faith for you wanting to buy that property. You have to truly be able to show that you want that property in a legitimate manner.
In that it's coming from you, not someone else.
Exactly.
Because if I always explain it like this, if it's not their money, then they don't have any consideration or any skin in the game.
Exactly.
Really.
Yep.
Skin in the game. So
Yep.
Okay. So what else involves escrow?
So we're also the people that handle all the documentation as well, to make sure that the buyer's documentation has been put into escrow, that the lender's documentation that they need in order to give out the money for your loan is taken care of. Seller's documentation, which is, tax forms and deeds and all the legal documents that you're going to record for the new ownership. All of it needs to be compiled into this one escrow, and it needs to be done by a neutral, disinterested third party, which is what we do, to ensure that everybody's going to be able to get their ownership and get their money at the time of transfer.
At close.
Yep.
I mean, you guys do so many things.
It's a lot of moving parts.
There's so many people that are involved in a sale of a property. You have the buyer, you have the seller, you have the realtor representing the seller, the realtor that's representing the buyer.
Yep.
You have the lender, you have the appraiser, you have title
inspector,
home
pest,
inspector.
and there really
people.
is a lot of parties.
And really, all of these parties are coming to one spot, and that's you.
That's me. Yep.
Yeah. And every single one of them will get paid from you.
Yep.
So
Yep.
then you disperse out the money. to
It's like
each-
me, I'm writing your checks for you. I'm writing the
Yeah.
checks for 5 or 6 or 7 different people to ensure that everybody's getting paid appropriately. And I'm balancing
Yeah.
out the register as I'm giving out the money. So
Yeah.
I'm like mom who sits down at the table and
Yeah.
writes the
I
checks
remember,
out and then,
yeah.
puts it in her little register and
Yeah.
balances it out.
Yeah.
We're sitting there doing that
Wow.
along the side of documentation and title insurance and all of that to make sure all those obligations are cleared as well.
Wow.
And you really only see me twice. You hear about me from the beginning when I talk to you about your earnest money,
Yeah.
and then I see you again when you sign your paperwork,
Yeah.
and
And
then that's it.
Wow.
But I'm really working super hard. Everybody in title is working
There's- I
super,
mean,
super hard
when you break
to
it down on
cheerlead for
everything you-
all the people.
Yeah, when you break it down on everything you just shared, I mean that's quite a bit of work that I know that you guys do a lot of work, but I mean when you break it down, I mean I'm like, man, that's a lot.
It's fast and furious.
Yeah. Yeah.
It's kind of like addicting though. Like you get addicted to like how can I do this that much better, or how can
Yeah.
I make this so much
I
more
like that.
simple for this person. Like
Yeah.
it's kind of fun to always have the challenge of what I can do for this client to make
Yeah.
it that much more
I
special.
love that.
So I
Love
actually
that.
have a lot of fun. So it
love
kind
that.
of could feel like a lot, but at the end of the day, I mean, like I said, it's your biggest investment. This is going
Yeah.
to be where you lay your children into bed
Yeah.
at night. This is where
Mhm.
you're going to,
Have so many memories.
have so
I mean,
many memories.
all the-
You're
yeah.
going to live with your spouse. And
Yeah.
so at the end of the day, all that work is so necessary,
To get
but
it
it's
right.
also so fulfilling to make
Yeah.
sure that you get it and you get what you want.
So good.
Yeah.
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 That's cool.
Yeah.
That's cool. So I know that you may or may not know this. I mean, I know you know this, but there's different states where they call them attorneys,
Mhm.
and then there's different states where they call them title.
Yep.
Or so, can you explain what the difference? Because we may have listeners that are in, let's say, an attorney state, not necessarily a title state.
So Massachusetts is an
Mhm.
attorney state. So you are a full-blown attorney. You go through law school. You're going through all of the things a jury attorney would, but
Okay.
you're specifically going to do the real estate transaction, and you're still coming to a title insurer to insure the title. But they're doing essentially everything an escrow officer is
So
doing.
they handle all the escrow, and you have to be an attorney to do this
Mm-hmm.
in these states.
Yep.
Got it.
Yep, and the attorney's going to be the ones who are notarizing everything. And then there's like I want to say it's Oregon. So you just cross the border. We're 3 hours away,
Yeah.
right? Completely different. So
Wow.
in Oregon, you have what you call an abstract, which is completely different than the title
Oh,
report.
really?
Yeah.
I didn't know. I
Yeah,
didn't
and
know.
it's just one thing, and even
It's called an abstract, not a title report.
yeah, yeah.
And what's the difference?
The title report is preliminary to a final policy,
Okay.
where the abstract is here it is.
Oh,
This is what it
I
is.
see. Got
And
it.
then they sign what you call a warranty deed rather than a grant deed, where that deed actually has certain warranties within that document.
I see.
Whereas a grant deed is saying, I grant you this property and then you paid
Okay.
X, Y, and Z for this amount.
Okay.
So
Wow.
and then the funny thing is like up here in Northern California, title and escrow is completely different than Southern California.
Yeah, I've experienced
So
that.
I do title and escrow. I do it all.
Mhm.
Whereas if you go to LA or anywhere in Southern California, you have a title officer
And an
at
escrow
one
officer.
company, and you have an escrow.
Oh, at a different company?
They can be completely different companies. They're completely separate. And so you're
Wow.
working with a title officer and you're working with an
You
escrow
know,
officer.
now that you say that, it's been a long time, but during the big foreclosure market that we had back in 2008, we were working with out-of-town title companies because the banks were saying, hey, you have to use this title
Right.
company or this escrow company.
Yeah, they have special companies that they hire on.
Yeah.
Yeah.
And come to think of it, I think we did do a few deals, quite a few transactions where there was an escrow company and a title company, which made it very, very confusing.
Yes. Yeah, it's just more people that are, rooting for
yeah.
you, but
Yeah.
at the end of the day, they can be very separate.
Yeah. Interesting.
Yep. It's
Wow.
very different in California, California to Oregon, everywhere else.
Yeah.
So it's just a matter of, again, no question is stupid because it's so different.
Right.
So ask away. Make sure you understand what's happening in your county, in your state, in your
Yeah.
region, your city,
Wow.
all of it.
Yeah, that's very, very important. Make sure you ask the question.
Yeah,
Yeah.
totally.
Yeah.
The more you know, knowledge is power. So
Mm-hmm.
you want to be empowered in your home ownership because you're going to
Yeah.
own that for a really long
Yeah.
period of time. You're definitely going to want to know and feel empowered to know that you made a great financial decision,
Yeah.
not just a great paint color
Yeah.
or, pretty handles in the kitchen.
Yeah.
You are going to be empowered to know you made a really strong financial decision.
I love that.
Yeah.
I love that. I mean, I feel like I could ask you a ton more questions on this topic because
I could keep going.
Yeah. Yeah. Couple more questions, and then the first one is: are there any other topics that you think are important for a first-time home buyer that you think that would be important for them to know?
Not specifically. When you get there, let's look it over. Let's talk about your documentation. Let's talk about your title report. Let's look at the maps together so that you understand easements. But specifically, it's all going to be very, very much about that piece of property.
Mhm.
So I don't know that I
Yeah.
could necessarily give anything for like a generality
Yeah.
other than
Yeah.
you're going to want to make sure that you don't just think that I can get a credit card or that you can show up with a lump of cash under the bed. You really want to make sure that you're having these conversations with people on what your plans are so that they can come along with you through that transaction and it won't be bumpy.
I love that.
Yeah, so just ask the questions. That's my best advice I could ever give.
That's awesome. Nice. Cool. And then I always ask anyone that comes on the podcast is to share with me the first time you purchased your home.
Okay, so
Yeah.
mine it was a little bit interesting. So we were actually renting a piece of property. Me and my husband, we were dating at the time, and we were renting a piece of property from a family friend, and we absolutely loved it, and we were gung ho about buying it. So we went and got a home inspection and found out we did not want that property.
Oh, really?
So, but at that same time, we're like, oh, wait a minute, like.
Were you in title at this time or no?
Yes.
You
Yeah.
were. Okay.
Yeah, I was an assistant, been in it for about 3-4 years at this point.
Yeah.
And so I was like, you know what, we're already shopping. Let's see what's out there. So we got into escrow on one. And unfortunately, same thing. The home inspection came back, very bad septic. We did not want septic issues. So we canceled. The moment we canceled, the home that we are in now came into our price range on the market at the perfect timing. And it was our dream house, everything we'd been looking for. So we jumped right on it. We went through a 30-day closing. It was absolutely perfect.
Yeah.
Closed on our first home. And
that's so cool.
Yep.
I love the fact that you guys hung in there.
Oh, yeah.
One of the big challenges I think as first-time home buyers is finding a home that they absolutely love and then hearing the news it can't be their house.
Right.
For whatever reason, home inspection, like your story or something comes up. But you guys hung in there.
It's kind of like trust the system. You have to have a certain trust in yourself, but also the system, because at the end of the day, you have to find the property that's going to be perfect for you. But to me, it's worth hanging in there because it's more scary to go through rent increases or be tied to a landlord who's not taking care of the maintenance that you need for your home, or that's, just sometimes they're icky. You know what I mean? Like there's so much to renting that's so hard that if you could just hang in there and you can get past the media scares or, the scares of inspections to really, you're really going to pay off at the end of it. It just feels like a lot at the time, but there's no better feeling than getting through all of that and holding the keys to your own home.
Love it.
Yes, and going, oh my God, I can pick paint colors,
Yeah.
or I can pick carpet, or
Yeah.
you get to do anything you
Yeah.
want to. So it's
Yeah.
worth all of it at the end of the day.
I love that. Thank you so much for sharing that.
Absolutely, yeah.
Yeah.
It's fun.
Yeah.
Fun, hard, there was tears along the way, but you just have to
Yeah.
trust the process, trust the people that are with you, that are
Yeah.
championing for you, your realtor, your lender.
Yeah, there's so many team members that a buyer has on their team. They have the lender that's helping them. They have the realtor, the buyer's agent. You have the title that you can ask questions. You have home inspector.
You have a lot of quiet cheerleaders, people who are
Yes.
sitting in the background cheerleading.
Yeah.
That you don't even realize.
That's awesome.
That you might say, a 5-minute conversation.
Yeah. That's awesome.
Yeah.
Well, Kelly, thank you so much
Thank you for having me.
coming. Yeah, this has been awesome.
Yeah, it's been fun.
Yeah.